It's our 5th year of announcing our results as a listed company. We had our maiden listing in May 2008, and it's been 5 years of interesting times. Revenue, we've topped the 9 billion mark with 9.1 billion revenue. That is 11% up. Had a very good operating profit, 16.2% up to 1.038 billion. And of course, the cash generation of the group at 3.2 billion. Now, the Eqstra Group has always been known as a quasi-bank that leases equipment to the industrial, to the mining and construction and different sectors in the South African economy. And we are a tremendous cash generative business, so cash generation from operations at 3.2 billion, that is 30.6% up. Shareholders' interest, of course, headline earnings per share. Our headline earnings this year that we achieved is R1.04 a share, 36% up from the previous year. The board felt very comfortable in declaring a dividend of 36 cents per share. And Eqstra has promised its shareholders that we want to be consistent in our dividend declaration of 3 times cover, and we're happy to prove that again this year. The base of the business is our revenue earning assets. That has grown by 8% to 9.6 billion rand, and a lot of that growth you will only see the benefit in 2-3 years' time, because the nature of the business and our accounting works. You don't immediately get the benefit of the revenue earning assets. That comes in the latter part of the contracts. Concern raised always by shareholders that don't understand the company. They say Eqstra has a high level of debt. Yes, we have 7.6 billion worth of debt, but our debt is all matched with revenue earning assets with blue chip corporates. We don't take interest rate risk. So if the interest rate moves up or down, Eqstra's debt is matched with, and the assets that we lease out to our customers is matched. The other thing is currency. Currency moves up and down. The rand weakens or strengthens. We don't take currency risk on our contracts either. If we do a dollar-based contract, as in Mozambique, we have R1 billion worth of equipment in Mozambique. In dollar terms, that debt is in dollar terms. That interest is matched with the term of that contract as well. So the interest, we raised a bond in the past year. There's a lot of appetite in the bond. This year, less than 45% of our debt comes from banks. It used to be a questioning that Eqstra's debt was heavily slanted towards banks. Less than 45% of our debt now comes from banks, the rest from the capital market, and there's a lot of appetite. So I think Eqstra has shown its diversity in all areas. The outlook going forward, economy is challenging, but Eqstra has shown its robustness and its resilience in the South African economy. The industrial action that is currently plaguing the country, yes, that will affect all industries, but Eqstra is considered to be a labor-light industry, particularly on our mining side. 30% of our business is exposed to South African mining. The reality is that we are mechanized, and we will be impacted indirectly or directly, but we do not have that many of the people at the lower levels where the big fight is on for salary increases. Most of our people are in the higher skilled bracket. The rest of the economy, our forklift business is doing very well. We're seeing, although the market is down, we're seeing growth with our Toyota forklifts, exceptional growth there. That business will go on the next year. The leasing asset business, leasing and fleet management business, always a very good defensive business, and that will give us good returns for the next year as well.